Hello and welcome to another episode of the Romeo CRT 2023 review. Here we're going to review trade number 10. This is a GBPUSD short that Romeo took on May 1st, 2023 during the New York AM session. We're going to break down the trade, look at it in FX replay. We'll do our normal candle counting. And we'll look at the ratio for delivery. This is a really excellent trade, and you can even see his execution on here. This is after he's moved his stop loss to break even, but you can see that he's sold in MetaTrader on the 5-minute chart here. So there's a bearish turtle soup above that key level there. That's what I would call the first origination candle. We can look at that on the hourly chart. And then you have this down close candle, or this range here, this bearish range, and it gets pause CRT. So there's some accumulation that happens, and then there's some manipulation. So it really kind of makes a market maker sell model in a lot of ways, with a kind of a cumulative range, and then a false turtle soup, and then the actual peak of manipulation that occurs into the higher time frame PD array, price delivery array. So the distribution looks really classic. It looks like a nice model number 1 on the 5-minute chart. Headed down. So let's get into FX replay, and I've already annotated the chart a little bit here. So here we are on the hourly chart. This is May 1st of 2023 with the pound, the GBPUSD Forex cross, and this candle right here kind of serves as the actually, I'm sorry, it's this candle. This candle serves as the origination candle. This candle is basically the candle that broke the low. It broke a previous swing low on the hourly chart. It broke that low right there. It closed below. Break below, close below. So you could say broke and closed below the low. Closed below the low. So it broke a significant low, kind of got price pushing past this accumulative range here, and so it closes below, and then it extends. And from a market making perspective, this initial move is essentially an overextension, or a move that is mistimed, or that requires further internal liquidity to be traded back into. And so because this was a bearish range, we're trading back into the buy side liquidity, is the internal liquidity on a bearish range. And so we trade all the way up through this previous fair value gap, though it is, and then we make a turtle soup there. And so I'll show you his, so he's using the 5-minute chart for his entry. So it basically forms a model number 1. It's about to form it right there. That's the hourly candle open on the 9 o'clock hourly candle. So price might push up, might wick up a little bit higher at that point. So we can watch it do it in real time there, or not really in real time, but in hindsight. So it makes that 5-minute doji, which for a candle that size relative to the other candles, you can kind of treat like this as a complete order block. Not even use the body, but also use the 2 symmetrical wicks. Then it forms an FVG. So this is a kind of a classic model number 1. And so a classic model number 1 entry would be for the price to trade back up into this order block. It might not. It might be more aggressive. We'll see. I think it does. Yeah, so it gets very, very close. It actually taps the 5-minute FVG that was formed after the order block. Oh, there it goes. So now it's tapped the order block. So this right here would be truly a classic entry to get in there at 9:35 on that 5-minute candle. And you're looking for the following risk to reward. So if you're risking, you know, you'll set your downside target for the day. You might even extend it a little past there. Though to be conservative, you can set your final take profit at or below the swing low there. That's being that's the range low, and we can watch the distribution. So you probably want to have a 1 to 3 risk to reward ratio, and then you can take partials at either the FEG here, the previous FEG, or actually it's an FEG on the opposing range is usually the rule. So let's look for, yeah, so it's not bad. I mean, there's on the 15-minute chart, there's a nice FEG right there that's, just about at 50% of the range. It's actually at probably around 0.618 fib of the range. But you can take partials at that point. Really clean entry with like very little drawdown. It's kind of a breaker entry from that breaker there, so you'd expect there to be very limited drawdown. There's a weird gap junction here between 9:45 and 10 a.m. I wonder if it was a news release. Yeah, so we trade below the low very confidently. We might have to trade back up into that gap junction. It might just be an error on the historical data that FX Replay has. So this is a good example of why you'd either like let the trade run after you move your stop loss to break even. I was actually indicating this swing low there as a good daily target. So we're hitting that swing low at 11:15 a.m. Kind of just before the London close. So yeah, so let's just do one more thing here before we end the video and just look at the candle counting aspect of this. So I like this as the origination candle because that candle truly gets souped. We actually do soup this headless candle as well. I was going to mention this headless candle before because it really sticks out on the chart when there's no wick on a kind of a bearish. The no upper wick is a really good buy side target in this case to look for turtle soup. And then this is also a nice little, like the wick of this hourly candle. But a really neat little trade. If you find trades like this every single day, I mean, that is the road to riches. It's not going to be a get rich quick scheme, but it's going to really build a trading account, pass prop firm evaluations, earn payouts. But yeah, so I forgot to candle count. Let's just candle count. So let's call this the origination candle. That means that this is about candle number 11 here. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Actually, sorry, that's candle number 9. So that fits pretty well then. That candle number 9 is kind of this manipulation into the first part of distribution. Then 10, 11, it actually completes its distribution within 2 hours, which is really impressive. If you think of this candle as essentially the peak of manipulation, really great bearish trade there. The other thing he had highlighted, which I was kind of found interesting on the 5-minute chart, and I see this pattern all the time on all sorts of different time frames, but it's this idea of when you have accumulation in a rising channel and price is kind of like doing a sine wave pattern within the rising channel, and then all of a sudden explodes higher in the manipulation leg. It's kind of funny with the pound. Maybe I can go to Brave. I can go into Trading View and I'll show you the pound right now. But we just saw a really similar structure play out. I want to say, is it the daily chart in the pound? It was kind of interesting that I noticed it. Yeah, more on the daily chart in the pound. So here, let me switch over to Brave and I'll show you exactly what I mean. So obviously price is fractal. Here, I don't have it quite set up yet here, so we'll just do that. There we go. Yeah, so this is the daily chart in the pound right now. So, you know, the market's just closed Friday, July 24th, 2026 as the making of this video. Now, I just want you to notice, like, as I was reviewing the trade number 10 here in the CRT 2023 series, you know, you have this swing low, and it's kind of a weaker swing low because, you know, there's some clear, like there's that key level right there, that 1.13 even, and it just barely souped that low there, and it pulled off the low with a lot of conviction, but then it turned into a pause CRT. Like, in other words, it took this range and it did distribute pretty well, but it never hit the highs either. So it kind of, like, you know, it did a. I'm wondering if the euro now. Forgive me for switching around so quickly. So it wasn't an SMT with the euro where the euro failed to clear the May highs, but these mid-May highs. I mean, this order block here on the daily that I've highlighted has really carried through, and it held because we just had this teeny little wick in there, and then immediately there was a bearish turtle soup using the bottom of the order block as a key level, which is very aggressive as a bearish entry. But anyways, we are distributing hard off of that, and so there's a little bit of a correlation. So just keep this picture in your mind with the rising trend channel, and then I'll switch back to the PowerPoint, or I'll switch back to my FX replay really quick. So you can see that it's a little different because we don't have, like, quite a dramatic turtle soup before we form the rising trend channel that forms all the LR and the classic accumulation. But we do have that explosion out of that channel higher, which gets all the market participants out of place as necessary to create enough buy-side liquidity, tap into enough buy-side liquidity, exploit it to then rip lower. So really great trade overall. Man, it's a 10 out of 10 trade. I hope to be this good in my trading. I've been trading this model ever since I started making this series in June, and it's really started to transform my trading.